The liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence and that a swift and stabilizing solution was absolutely necessary.
That's the Swiss president, Alain Berset, announcing that one of the country's biggest banks, Credit Suisse, is to be swallowed up by its rival bank, UBS, for $1 billion. Now, this shotgun merger happened less than a week after UK financial authorities saved the British arm of Silicon Valley Bank, which had collapsed in the US. These troubles either side of the Atlantic have spooked investors. The concern now, though, is other banks could follow. So are we teetering on the edge of another financial crash? I'm Sally Lockwood, and this is the Sky News Daily. Now, to put all this into context, I'm joined by our economics and data editor, Ed Conway. Ed, it's good to have you with us. Can you begin with explaining what on earth is going on?
I mean, it's kind of hard to put it all together, really, just because it is a lot of what bankers and regulators would call kind of idiosyncratic issues at certain different banks which aren't exactly connected.
OK, so let's start at the beginning. This current period of instability in the banking system started with a relatively small American bank called Silicon Valley Bank. Explain what happened there.
So Silicon Valley Bank had its own really specific issues. In particular, a lot of big tech investors had enormous amounts in there. A lot of it wasn't protected by deposit insurance. And also they took big bets on interest rates, which kind of went the wrong way, and then put all of that together. And then you have kind of pretty good ingredients for a bank run, people pulling their money out. And because of the nature of the way that banks work, this is pretty crucial. No bank in the world has 100% of the deposits in there. We all know this. We've learnt this in this country from Northern Rock, that if every depositor goes to a bank and asks for their money at once, then that bank is bust. So that was proven to the world by Silicon Valley Bank. And you had other banks like Signature Bank in the US, which had big problems. And then the US kind of authorities intervened.
So that was all going on last week over in the US. But over the weekend, we've seen it spread to Europe, and specifically to one of the biggest banks in Switzerland, Credit Suisse.
I mean, Credit Suisse has been definitely in the eyes of people who follow banking in some degree of trouble for quite some time. As you know, it's been badly run. They've had problem after problem over the course of the past few years. And it's had been in trouble. And looking at its share price, it wasn't just in the last few weeks that it's fallen. It's been falling for quite some time because people consider it to be badly run. And whether it's a combination of interest rates are going up, so that heightens the pressure on banks, and the fact that you have this bank collapse in the US underlining that, that bank runs can happen, and the fact that people are nervous and looking about who's next, and the fact that they had to restate their accounts. You put it all together and, whether it's a kind of series of unfortunate events, it has all kind of totted up to people looking at Credit Suisse over the last week or so and saying, gosh, we don't want to put our money there. And it all culminated over the weekend with the authorities basically forcing it into this kind of forced marriage with UBS. And this is a kind of more than 160-year-old bank. And this is one of the iconic Swiss banks, which a lot of people have money with around the world. And it is now no more. So it is an enormous moment.
It certainly feels like a big deal. And the world of banking thinks so too, right? Because they've taken some measures to try and reassure the markets, haven't they?
Yeah, you have authorities like the Bank of England and the Federal Reserve saying we are opening swap lines. And if you follow the financial crisis, you'll hear those words with a kind of shudder of fear, because those were precisely the kind of emergency measures that they introduced following the crisis in 2008. It turns out, they did as well during COVID, and they did as well after the UK voted for Brexit. So it's not always times where things are going to turn into a kind of massive, global catastrophe. But you see, all of this added up is making people very nervous about the state of the financial system at the moment. I mean, it's easy to, with the benefit of hindsight, to say that in 2007, 2008, it all looked like it was heading in that direction. But it does feel quite different in the respect that the banks aren't necessarily kind of full of as much toxic stuff as they were last time around. All of this mortgage debt that had obviously gone bad and hadn't been accounted for. There is an argument, definitely, and I think it's not just an argument, it's pretty clear that because interest rates are higher, that then causes a lot of pressure on banks' balance sheets. So that there is definitely there are some problems beneath the surface, but it feels like it's not. It doesn't feel like we're at kind of that tip of an iceberg moment in the way that we did when Lehman Brothers collapsed in 2008. I say that with slight trepidation because you just never know what can happen. And back to my point earlier on, there is no bank in the world that if every depositor decided they wanted their money out straight away wouldn't collapse. So from that respect, every single bank in the world is vulnerable to a bank run. And
certainly Credit Suisse is a much bigger deal than Silicon Valley Bank, which was much smaller, a niche lender. Is that, of course, adding to market uncertainty and concern and indeed jitters among investors? Well,
it definitely it had been, because, Credit Suisse was basically imploding, for want of a better word, over the course of the last couple of weeks, really, week and a half. And it's quite striking, actually. I talk to people within financial regulation, people in central banks, people in kind of government ministries as well. And one of the striking things is when they were dealing with Silicon Valley Bank, they were like contemporaneously saying, oh, but we're also nervous about Credit Suisse. So it was there on the radar for a while. The hope, and I think it's too early to say. I mean, looking at markets, I don't think they're panicking exactly, but they are responding. They're kind of finding new place, new equilibrium. It's actually a slight reassurance that the Swiss authorities have stepped in quite quickly and done something about it. If you talk to people in markets, they're like, okay, that had to happen at some point. There had to be a kind of, a resolution at some point for all the problems. At least they've done something about it.
Yeah.
The issue is, it's like I say, now, at this stage, are there going to be problems in other banks? We just don't know.
Before we get on to what this means for consumers, Ed, UBS agreed to buy Credit Suisse, and this, of course, was brokered by the Swiss government.
At the barrel of a gun, though, it's got to be said.
And it was to stop what they said was the unthinkable from happening. Paint the picture for us. What would that have meant? What is the unthinkable?
The unthinkable is something like Lehman Brothers, because when a big investment bank goes down, okay, and Lehman Brothers is the only real kind of big example that we have, certainly in modern times. Yeah. Imagine a kind of spider's web of different financial connections that goes all the way around the financial system. That's kind of what you have with big investment banks. They're all kind of interlocked in various different financial relationships that are very hard to unpick. And so if one of them suddenly implodes, then you potentially have a chain reaction that affects the rest of the system. And so I think that was part of the fear. And that's why, UBS didn't really want to buy them. Clearly, Credit Suisse didn't want to be taken over. But the Swiss authorities basically steamed in, and I said, at the barrel of a gun. But they did, really. It was a very unusual, the way this takeover was orchestrated. And I think there's two things to take from that. First of all, a lot of people will say, good, at least that was decisive. But secondly, that raises another question, okay. If you have a similar thing happening to, I don't know, Deutsche Bank or BNP Paribas, which are big German and French banks respectively, could those authorities, the Germans and the French authorities, be able to put together something like this as quickly? Would they be hamstrung by the kind of European system of regulation, because they're obviously part of the EU? Switzerland, let's not forget, is not part of the EU. Would they be able to act so quickly? Probably not. Switzerland managed to sort it out over a weekend. Other countries might have more trouble. So that's another big question mark.
When you saw this news break over the weekend, Ed, as an economist and someone who studies this in great detail, what was your first thought? Of course, the big question on many people's lips is this 2008 all over again?
Yeah, I mean, that's having kind of lived and reported through 2008. That's my fear. It's so weird because everyone you talk to, and these are people who do know what they're talking about, say this is very different. And it is different in one important respect, which is that back in 2008, a lot of banks around the world didn't have much capital. And what that means is, their balance sheets weren't very strong, so they wouldn't be able to withstand a crisis. And that is true. They are much better this time. But the slightly unnerving thing, very unnerving really, is that did go for Credit Suisse as well. Yes, it had lots of problems over the last few years. Yes, it wasn't doing all that well. But it did have quite a lot of capital in its balance sheet. And that still didn't save it. And it still went down. So on the one hand, I'm slightly assured. But on the other hand, I don't know if I am. The other side of it is, if people, depositors and so on, decide that they don't want to keep their money in a bank and pull it out, then, that is a kind of big confidence issue on the other side. And I think that's kind of where we are, is that people are just rightfully, after what they saw happening with Silicon Valley Bank, just getting a bit nervous about where they're putting their money. And as a result of that, they're kind of shifting it around a bit, and that's affecting certain banks. That's why the authorities are desperate to try and kind of encourage confidence to come back into the system.
Yeah. And as you say, many people will remember those scenes 15 years ago of Northern Rock customers queuing round the block to pull their money out before the bank collapsed. How far away are we from seeing that sort of thing again?
Well, hopefully a long way. And I think the banks are in a better state than they were back then, kind of a lot better of a state. And the UK actually doesn't look too bad in comparison with a lot of these other places. And let's not forget, Silicon Valley Bank, it didn't really get rescued in the US. I mean, the depositors got rescued, but the bank itself is still basically insolvent. Whereas over here in the UK, the bank did get kind of sold on slightly at the end of a barrel of gun, but it got sold on to HSBC. It got dealt with very quickly. The UK, dare we say, has dealt with this quite well so far. But I mean, famous last words. I think the thing that I'd be worried about is kind of the economic consequences. So let's leave aside all of this financial stuff at the moment. What happens when banks are really kind of strained? They tend to withdraw from the market in terms of lending. Rather than lending out money, they want people to put it in. And so as a result, I'd look at all of this and say, ooh, does this mean we're heading for a credit crunch? In other words, banks basically not wanting to lend, even if you're a pretty good prospect. I'd say that's the worry right now.
Yeah, and of course, people have already been really hit by the cost of living, by higher interest rates in terms of mortgages, etc. If we do indeed see this credit crunch, what will that mean for people in real terms?
Well, it means it becomes harder to borrow. Many of us lived through that period from 2008-ish onwards. It was a long period where it was really difficult, far more difficult than it should have been. Even if you had a good prospect, even if you had, good opportunities to get mortgages and to get business loans, and pretty much every bit of government policy was about trying to get more lending going. And I think that's problematic if banks are going to suddenly be more reluctant to do it. But it's hard not to see that as one likely outcome of this. When they're nervous, it's like a turtle retreating back into its shell. They don't want to come out. They don't want to lend that money out. I should say, this is kind of my hunch. We're yet to see the Bank of England or anyone say anything about this, but I think that matters.
And just lastly, a final thought from you, Ed. As you say, hopefully we're far off seeing those scenes that we saw in 2008. The situation isn't as dire this time, but the banking sector does seem to be taking a deep breath right now. Yeah, everything that we look at. And let me say that, so back in 2008, I was really nervous about the state of the financial system. And I remember feeling that it was kind of a bottomless pit and we were teetering over the edge of it. It really doesn't feel quite like that this time around. It's a confidence thing. It's people have been nerved out, understandably, by what's happened in Silicon Valley Bank. On top of that, interest rates are rising and we're just feeling the kind of squeeze from that. It shouldn't add up to a system that is absolutely toxic. It shouldn't be that the banks are in the kind of problems they were back then. But as I say, confidence is all that matters. You need some confidence in the system so that people feel they can leave their money with banks, because if everyone's going to decide they're going to take their money out at once, then they're all gone. They're all bust. I'm certainly not as nervous looking at the state of the financial system as I was back in 2008. And hopefully over the coming weeks, people will realise that it's not quite as scary as that, I hope. OK, Ed, thanks so much. It's always great to get your insight and for you to put this in context. Thanks so much. Thanks, Sally. My thanks to Ed Conway and to you for listening to the Sky News Daily with me, Sally Lockwood. This episode was produced by Rosie Gillett. Our editor is Philly Beaumont.